Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host, Landy, and today is June 3rd, 2026, and we're looking at Bitcoin here on the daily to start with. And, well, it made the move that we talked about on Monday. And I had mentioned, and have been talking about this for quite some time, that any move back to 72, 72, 2, and the zone here on the top side here where the closes came in at 70,000 to 70,500. Bitcoin needed to hold up there. And the SOS level to watch for would be $68,000 to $69,000 or so, around where the original trend change came off of $65,000 at the low side of the range. But I've mentioned this over and over and over again. Realistically, closes below, $70,000, 70,500 here, any kind of bearish reclaim of the lows, the whole bottom side's open, right? Lose this area as support. We did see a nice strike right in there on Monday. A little bit of a buyback off of that 70,500 area. And then the next day, nuke right through it. And then, of course, in the Wednesday session, right back to the bottom side of the range, 65 to 62.5. We've talked quite a bit about this, and now we have seen it occur. Now, the big thing here is, even in lower term timeframes, I was watching this on the breakdown. Here's the excuse me. Excuse me. Here's the breakdown. We saw the bounce on Monday coming into close at 70,500. We even saw the nice retest of this daily area at 74 to 76, retested after being lost. Saw the bounce out of there. The front run of this weekly overhead at 78, 78.4 on the bottom side of that weekly. Right back down into this daily level 74 to 76. Kind of front run the 72, 72.2 area. Retests of 74, and then right down into the zone for liquidity. And then, of course, it did start to lose it. We saw it in lower term timeframes during the late Monday session. Now, of course, the Monday candle was already closed at this point. But the late Monday session into Tuesday, we saw it come down and test the top side of this daily trend changing area. Right around the prior all-time high at 69K. In this case, we're on 69, 2 to 3. And then close open right on it and then move right through it down to the next major weekly. So daily zones, typically, when you see a strong move into them like this, didn't really, it's, maybe shorter term time frames like what we saw, close open right on it to hold it and then the next candle right through it. When you see something like that, as I mentioned, we're looking right back to the bottom side of the range, anywhere below $70,000 to $72,000. I've been looking for, the entire bottom side of the range to be open all the way down to the lows and lower. And in this case, now we're starting to see the 65 to 62.5 area get filled out. And where would this change, even on lower term timeframes? Well, on lower term timeframes, there is some opportunity for the bulls if they can work their way back above 65 and then take out this lower high structure right here at 67.5 and then work back towards this daily area around the 68.2 to 69.3 in this case. But realistically, this is a move still in progress to the downside. Last lower highs at $78,000 in the daily. So, there's no reason to look for this not to actually, even on lower term time frame bounces, not very interesting, because on the daily we would need to see, another. Well, I'm sorry, I apologize. I said $78,000. That was the prior lower high. The last lower high now is at 74.1. So same criteria as Monday when we got the close inside of the 70,500 to 72.2. Excuse me. Now, we are hitting extremes. We are at the bottom side of the range here. We did see that now here on the dailies, we have taken out the weekly higher low structure. And Could things continue down? Sure. If we continue to see, liquidation cascades, which we haven't really seen, we haven't seen as much as I would like to see, to be quite honest, on a move down, on a very sharp move down. This is being driven by a lot of spot selling, but we're not seeing the liquidation cascades that I would like to see. We still have, and in fact, let's go over to Coinalyze. It's a free site that you can look at. Coinalyze has open interest here. I'd like to point out that the last time, and we'll see where open interest is now on the daily time frame. Let's go ahead and full screen this. So the last time that Bitcoin traded down here, below, we'll call it below $65,000, we were at about 21 billion in open interest. So aggregated open interest, we're still about 1.5 billion over that. And price is lower. Now, you could, it's a mixture of, long and short open interest, but, you can come over here and you can see that the long short ratio is still, it's been climbing the entire time. So we haven't, even though we have seen liquidations for Bitcoin here, we haven't seen like just hellacious liquidations that, send the bars off the bottom of the chart here. This is the hourly. Let's go to the daily. They're substantial, sure. They're the biggest we've seen since the lows. I'd like to see more of that open interest wiped out. Now that, the problem here is, yes, we are seeing the long side get hit pretty hard, but still seeing that open interest staying fairly elevated relative to the last time that price was here. And I do use the last time that price was here as a reference. And realistically, I'd like to see some of that open interest wiped out. And in my opinion, here in this area, that would probably involve Bitcoin heading down to, 62.5 and maybe even under towards the low, down at $60,000, maybe even a sweep of that to maybe get that open interest off the board. Although if we were to start seeing those, the long side unwind, what we would see is also, when you see something like that, what we would be looking for, if we see a bunch of stops and liquidations getting hit, is we would see the aggregated funding rate flip negative, right? So this is predicted, but we'd see it, as it wipes out those longs, flip slightly negative before longs can, because then you're kind of taking those longs off the board. Short side kind of equals out. Funding flips negative briefly and then flips back positive as longs re-enter. And right now we've seen longs stay, pretty steady even on the move down, and then began building around, that $70,000 to $72,000 level pretty steadily. And even though we have seen stops and liquidations, I don't think that we've seen enough pain to flip that funding. I'd like to see it, from this move currently at the 70 to 72 here. We haven't seen it flip even briefly, so I think we need to see more longs wiped out, and that's going to be further downside. So if we do get, a bounce, even in lower term timeframes, doesn't do anything unless, it bounced all the way back and, from here without making any other lower highs and closed above 74, 156. That would, maybe change. That would change a little bit, obviously, recovering back above here. That'd be kind of insane to see. Not that it's impossible, but it's fairly improbable from here. Definitely not impossible, but very highly improbable at this particular moment. This is a move in progress. So, it's just kind of like on the daily here. It's full on expansion mode. It's got juice. It can keep going. And it can keep trending. Now that it's back in this range, if you want to take the extremes of the range, 62.5 to the bottom side here, to the top side of this narrower range, you're looking at that 72. So it's essentially 62.5 to 72.2 up here. we could see things bounce aggressively even from this range. Like, let's say that it sticks and holds in and around 62.5 to 65 on the low side, sets a low and starts to bounce. It's still heavily down, even inside of this range between 70,000 and 72. So, as it stands right now, it's just a move in progress and just wait it out, to see where kind of things land. We would need to see structure build. So I'll give you an example real quick of what I mean in that. We can turn off Bollinger Band set here. BBWP is telling me that this could bounce aggressively and still it's downside as long as it's trading below the basis, which is all the way at 74, which is where a trend change would occur. But this is all lining up to continue the trend down, even if it does set lows here fairly soon. We would need to see things go back into a bit of consolidation, see BBWP cool down. But, if, and this is an if, right? This is kind of what you'd be looking for. So we'll just take it from this lower high, lower low to this particular area. What you'd want to see is something like a local lower high. And then, higher low, equal low structure that can try to break back up and start to form a consolidation, slow down that expansion to the downside, right? And in this case, until we, see something like that, this is just an example. I'm not saying that this is going to be the area that we're going to see, a lower low set in, but, it's a decent candidate. We are at extremes. A few things that show us that we are at extremes is RSI, pretty darn low level. It can go lower though, right? And in fact, I'm curious. So last time we were down here, we got in and around this area. Now we did see this kind of swing down yesterday, lower and reach in and around this extreme read down here, which is a 15 read for RSI on the daily. It did reach down there, but after the little bit of a buyback, it kind of creeped back up into the open that we're seeing right now. So if we were going to hit that extreme, where would we be? User alert below. Yeah, it's 60K. So right now from here, after the updated close, if we see RSI drop down to the 15 read, that's essentially right back to 60K. And, that would be extreme on RSI or extremes on RSI. But with a move in motion like this on expansion, it's all about watching 62.5. We see that dropped. We're very highly likely going in for a test of this low, 58 to 60K, fair game. That would be on kind of continuation. If we do see like a daily bounce, I'll get you some updated numbers on Friday, but realistically, if we continue down to some of those lower levels and even lower than that, of course, that's where, below 58 to 60, right here, then we're looking, mid to low 50s. And that's anywhere between the weeklies here, between right around 56,000 to, 55,000. It's technically 54.9 to around 55.9. You can just call it 54 to 56 right here, or 55 to 56 rather, with 53.5 being a level there, and then 52.5. Wider weekly is essentially 52.5 to 56, or 55.8 in this case on spot. And then anywhere below there, I'm not necessarily looking for like a one shot, even if it did aggressively run this low without setting a lower low anytime soon. Even if it did aggressively run it, I'm not necessarily looking for a one shot of this entire range, but weirder things have happened. And I'm still looking at having about a $1.5 billion premium in open interest here, with intense spot selling coming from the institutional side, ETF side, with all of those redemptions. Anywhere below the 52.5, I'd be looking 48 to 50. I'll throw some levels on there actually that I think is relevant that are around 50K. But that's generally the next bigger areas that I'd be looking. So realistically, just watch 52.5 to the downside. closes, if it doesn't continue any lower, any closes below there, likely even if it bounces, start to target that 58 to 60 area, at least initially in lower term timeframes, and then evaluate it for daily closes, because it is mid to low 50s from there. If we do see a bounce within this area, yes, it's at extremes. It's not screaming yet, and the market's not screaming yet. It's not there. I know that maybe your timelines are looking that way, but the market's not there. This is saying that it's still got some juice to the downside for a regular Stoke as well. We're nowhere near any kind of a setup, even for like any kind of a entertaining a daily, like an aggressive daily bounce or anything like that as of yet. All the way back up. This was something else that I was looking at the other day. So let's go ahead and bring this back down to the 20 read. Even back up above the critical zone, we're looking at 64. Interesting. So we're looking at 64 here. User alert is right. Am I looking at this right? Yeah, I am. Where are we trading? Yeah, 64. Yeah, okay. That would be right. So 64.3 doesn't do much. Would be back above the critical 20 read. Now where is the bearish control zone? That's 69. So 69 to 60. So essentially that would be bounces back. Getting out of the bearish control zone or back towards the edge of it would be essentially retesting this area. So if we do start to see above 65 here, then we can entertain moves back to, potentially in and around this 68 to 69K area. And then I'd be looking for things to trend down and for bullish divergences to start playing out, right? But the move's still in progress. As it's still in progress, just watch 62.5 and then 58 to 60 in the mid to low 50s from there. But if we do see this area start to hold up between now and Friday, then we can start looking at potential areas of interest back to the upside for likely, lower highs still. And if you want to play lower term time frame trend changes, I would be looking at the 4-hour, right, as it relates to the 12-hour. And today's all going to be Bitcoin, just because I know that there's a lot of people freaking out. You can see that a test down into 62.5 is fair game right now, and any kind of closes below there, right down into 58 to 60, and you can see the very tight compression that we were at on the 4-hour. So after losing the 74 side of that, 74 to 76. $1,000 area coming down, front running 72. It went into a very, very tight compression through Sunday into Monday, got that initial expansion down, continued that expansion all the way through to this zone. So while we did see a little bit of a bounce in the Tuesday session up, this could start to slow down on the 4-hour, with a retest or a swing of 62.5 for that lower second is. But this, every 4 hours is going to keep ticking down towards that low. So just, I'd be watching for closes, especially coming into the daily closes below 62.5. Very highly likely that we see things, maybe chop around, then try for that 58 to 60 sweep, and then see how price reacts there. Same area that I mentioned earlier, like about 67.4, 67.5, and then we can start looking at that 68 to 69. Probably going to see this continue to trend down though. To be quite honest, the way it's looking right now. Yeah, 6-hour. We're at extremes, absolutely. But in the way that this is at extremes, it still has room to the downside, especially from the volatility point of view. And then it's all about continuing to watch that daily. So, don't fade the move in progress, right? I would be very careful if you're trying to scalp this on the long side, because you're probably just going to get your liquidity taken. This market is not set up to not take your liquidity right now, especially with all that extra open interest. And I wanted to bring this up. yeah, Bitcoin daily dashboard for the ETFs. So right, there we go. Sorry. So yeah, this is your sell pressure, right? It's not the only place that we're seeing sell pressure. Miners are transferring Bitcoin to exchanges and selling. We're seeing OG wallets coming in and doing some sales. Not as much as you might think, actually, from the OG wallets, but we're seeing a lot of transfers in from miners on the spot side to crypto native exchanges that's selling. And then, of course, we're seeing the spot selling pressure from redemptions. And I think we just completed 12 days or 13 days. So we'll go 15th to 3rd. So yeah, I mean, we're looking at sell-offs in on the spot ETF side of things. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah. So just completed the 12 days, and this would likely be 13 once this updates to grab that data from the from today's session. So I mean, there's your reasons why, right? It's the redemptions, those in-kind redemptions, require the offloading of spot, and spot is driving things to the downside. And I don't like how resilient the perps markets have been. So I expect them to get wiped out and see that open interest get a spike down, flip that funding, at least if it's just briefly, and then build that open interest back up. We just haven't seen it yet. Yeah, that's pretty much it. That's pretty much all I got for you on this end of things. And I guess we'll check up, right? Like, no real big surprises here. We hit our targets to the upside, at 760 for SPY. Watch for any kind of moves below 748. Still the same as Monday. We hit the targets to the up. Well, we came just shy. What did I say? 30. We didn't really. We kind of played in between. Yeah. So the high, I guess we did. Yeah. So we kind of played in and around the high. It was looking 30,000. 5 to 8 by the upper second. It's about 825 right now. Didn't quite get the 8. 7 was a high there, 762. Yeah, so I mean, close enough. Big thing here is just to watch for potential gap fills and reclaims of this prior high, right? So, it can come down to 29,670, 29,600 area and swing, but you want to see it holding up. Otherwise, I think it's going to start to crack back towards this wider area. 28, 5 to 6, and to 28, 6 to 7. Dow, we got the 51.3 to 5 spike. So we got that 51.3, that low side 51.350, and then right back down. For this, I'd be watching for this swing low, right? And in fact, you can take the entire zone here. And I would actually, for this, you could take the high side here, 50K to 50,500. That's kind of the target area right now. There would be a little bit of a trend change here at 50,300, but I just watch this area closely. Not too much else to say there. We can just really quickly check on oil. I said, above 90 to 95. It's the highest risk stuff. It's going to be at risk. And that was Bitcoin and the wider crypto markets, barring those outliers. And we all know what those outliers are. There's a couple of obviously Hyperliquid and a few others that are running some privacy tokens and stuff like that. You're even seeing some AI stuff like Venice and a few others that are getting nice moves. But if we do see a larger liquidation event, markets just watch out. Even if you are looking at those charts and they're good, they've been cooking to the upside for a while too. So don't rule out corrections there. Just be careful, be defensive, right? It's a tale of two markets. Traditional markets, as I've shown you on the charts, never broke higher term time frame structure on the monthly. Crypto markets did everywhere. Bitcoin and all the majors and many of the even smaller stuff broke monthly structure. Some stuff has had some more shine and been able to recover and was recovering even as some of these other things were breaking monthly structure. So it's a bear market, right? We have a trend breaking structure on a higher term time frame. Bear market going to be more sensitive to the further end risk stuff when we do see those increase in oil costs. And when we see that stuff go up for traditional markets being in their bull structure, which have maintained bull structure since the previous bear market on the monthly time frames, despite the big shocks in Q1 to Q2 of last year and this year, to the downside, like it's kind of nothing, right? It's just shrugged it off. So bull market continues, smaller corrections on lower time frames. And while we see, Bitcoin and other cryptocurrencies sitting on supports or approaching supports to the downside, those oil shocks to the upside, and then, especially above 90 to 95, like I said, closes that get up there, look for 98 to 102.5, potentially more. But we'll see where the floor gets reset to. And we've seen what I've been talking about play out, that snapback in oil after losing 90 to 95. Now we see kind of where things settle out. And then, we're right back to the bottom side of the range. Said rubber hits the road around 70, 70,000, 70,500 to 72.2. Said it for quite a while. And, there were some people that faded that. And I hope that they now come back and readjust, right? And we're at the bottom side of the range, and I think that towards the bottom side of the range and under is when we can really evaluate where value is for long side trades, accumulation, and all that kind of stuff. Some are even buying in these areas. So I don't think it's ready yet, though. We'll see. We shall see. And I'll talk to you again on Friday, where we'll look at these same charts and we'll go, oh, was I right? Was I wrong? Did we hit our targets to the downside? Did we get the bounce back to the upside? Where are we at? And honestly, even if we bounce aggressively, like I said, like stupidly aggressive bounces don't matter below 74.1, although would look great if we saw above 72. That would be an amazing recovery, but still wouldn't do anything below 74.1 or so. And it's continuation until proven otherwise. And looks like we're headed down to possibly test that 62.5 now, and maybe even further. We shall see. I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care. Oh, and like and share this out there and all that good stuff. I do appreciate it.